record this session so that we can post it on the website afterwards, and then anybody who was not able to join live today can access this session. We also ask you, we're going to keep you all on mute during the session, and we're going to open up to Q&A towards the end. The reason why we please ask you to keep your mic on mute during the presentation part is to preserve audio quality, and just so that you can hear us loud and clear. That said, we encourage you to use the chat box throughout, so that any thoughts, questions, reflections, please start putting them in the chat box. You can see the chat box on the bottom of your screen. It looks like a little dialogue bubble and says chat. So just start sending any thoughts, questions, reflections as we go there, and we'll open up to Q&A towards the end. So with that, the plan for today is to start a little bit by understanding, what is, why is this work so important? Why do we need to understand impact performance, and what are we doing on the GIIN side to drive towards, better, more rigorous understanding of impact performance? We're then going to do a deep dive into the impact performance study on agriculture, the approach and collaboration, as well as the result and the learnings. And also Sophia is going to show us on Tableau, which is a software that the GIIN uses to show the analytics. She's going to do a little demo on the analytics so that you can see how that works. And then we're going to talk about what's next. So how can you get involved, and what's coming after this work. And of course, we'll open up to Q&A towards the end. So one thing, we want to start by framing today's objective. So as I just said, as we go through the presentation, we would love for you to use the chat box to start reflecting on some of the, of these questions that we have here. So what we would love to know as we present this is, what content is resonating most with you? If there's anything surprising, please let us know what that is. If you have also any examples of your own portfolio that are either aligned with these findings or don't align with these findings, we'd love to hear that as well. And also, we'd like to hear how do you envision using this type of data and analysis in your own investment process. So keep this in the back of your mind. My colleague Sophia will repeat this as well before she dives into the analysis. But this is what we would really love to hear from you. And then, of course, any other questions that you have during the Q&A, we'll open to that. So a little bit on the context setting and on the importance of this work. As you probably have heard us say at the GIIN, we dream to create a world where social and environmental factors are routinely integrated into investment decisions, just as a regular, normal way of doing business. And to be able to get to this dream, we have a strategy with 3 pillars. The first one is to mobilize more capital for impact investing globally, right? So increase the capital and increase the size of the impact investing market, which already we estimate at about $715 billion. The second one is, and it goes together with growing the size of impact investing and safeguarding the integrity of impact investing. So we want this market to scale, but we want it to scale with integrity. And the third one is around fueling the global impact investing movement to change mindsets about the role of capital in society. A lot of the work that we do with IRIS Plus and in the IMM work, as well as the work we're going to be talking about today with understanding performance, really touches on safeguarding the integrity of impact investing. So, we have, IRIS Plus, which helps, provide the standards for impact measurement management and the best practices. And then impact performance really is brought together, or understanding of impact performance is really brought together by both IRIS Plus and the impact performance studies. And we're going to get into more detail into that during the conversation today. And then finally, the other aspect of the key to safeguarding the integrity of impact investing is greater transparency. And this is something that we hear from a lot of you, and actually for those of you who are familiar with the GIIN annual survey, one of the main concerns that investors expressed when looking at the future of the industry is, the risk of impact washing. And so greater transparency is something that is important for our board. And this is something that we plan to address with the IRIS Plus list, which is a new functionality in development. You have heard us talk about that, and there will be more on that. But the focus of today really is on how we're driving towards understanding of impact performance. And the way we do this, and this is one of the GIIN's biggest priorities, and the way we do this is in two very complementary ways. So we do this together with IRIS Plus and with the impact performance studies. IRIS Plus, you know it, it's a system which helps you, measure, manage, and optimize impact. And what it does is that it standardizes impact data so that you can, with the IRIS metrics and the core metric sets and the evidence base, you can measure whether, your results are, how your results are tracking towards your goals. Are you, are your investments, is your portfolio, or is your enterprise, performing against your goals? The other key piece that has been missing until now, and that we keep hearing from investors as one of the biggest needs in the market, is to be able to understand not just your performance, against your own portfolio, but how does your performance compare to those of others? How does your performance compare to that of the market? And really be able to understand, are we moving the needle? Are we making a difference when we invest in housing or we invest in agriculture? The SDGs have been embraced all around the world, and we need to make sure that, when we talk about no poverty or food, are we moving the needle with the investments that we're making? And the only way to be able to understand that is to look at, aggregated impact performance at a sector level. So this is what I am thrilled to, we are thrilled to share with you all, the impact performance studies are starting to look at. So the impact performance studies build on IRIS Plus. They build on the core metric sets and the evidence base. Let's go back to the other slide, please. And the core metric sets and the IRIS metrics to structure the analysis. And then they aggregate performance at a sector level. In this case, today we're going to be talking about agriculture. And also, while these are not, we don't call these benchmarks, these are laying the ground for more impact performance analytics to come in the future, whether it's ratings or benchmarks or not. And this is what is helping, investors understand not just how your portfolio is performing against your own goals, but also how does that compare to the one of others. So next slide. And so those that we wanted to share with you, most of you know through the IRIS Plus, working group, how we develop content and how our content starts. Our content development on a thematic level starts with the Navigating Impact project, where we partner with an expert. Right now we're working on, or we just kicked off sustainable agriculture. We recently completed quality jobs, which was conducted with the ILO, and climate change mitigation, which was conducted with CIRIS. This work through a Navigating Impact project surfaces the most important research, the recommended metrics for each of these themes. Then we put that into what we call the standardization and public comment period, so that content can go into IRIS Plus. So for example, right now, as you know, we have open to public comment period. And so this is where we take the metrics that were recommended during the Navigating Impact project, and we look at it, whether we have gaps in the catalog, whether anything needs to be adjusted or failed. We build the core metric sets, and we put all these up to public comment. So please, feel free to participate in the public comments, give us your feedback. This is then based on your feedback that we receive, content eventually makes it to IRIS Plus. And what we want to show too is that all the work that happens for the impact performance analytics comes together with this. And while this chevron looks as if it starts after IRIS Plus, it's actually, the chevron is not correct. The process of the impact performance analytics starts all the way from the beginning, and IRIS Plus and impact performance studies work together, both to not only the impact performance work builds on IRIS Plus, but it also provides a feedback loop. So what we hear, what we learn from the impact performance studies and what metrics are most useful, or if there are any metrics that investors are using to understand their performance that are not in IRIS Plus, and that provides feedback on gaps we need to address. And then, yes, so also, as you know, we're in an ongoing development process. So what you see on the left-hand side under the orange chevron is everything that is already in IRIS Plus. So this is, all these themes already have their core metric sets, their evidence base, and their research and resources. What's in green in the middle is what's in development and will launch in 2020. So these 3, WASH, quality jobs, and climate change mitigation, have launched already in the Navigating Impact project. And now the next step is the public comment period so that they can then launch on IRIS+. And on the right-hand side in the pipeline is, what's coming next. And one of the ones actually we see there, sustainable agriculture, that actually kicked off recently. And the next we're going to be tackling over the next years or so. And what we see here too is that, let's do one more click. The impact performance studies that are available are also aligned with the IRIS+ themes, of course. So the first set that was launched was, which was a pilot study last October, looked at financial inclusion investments and energy access investments. And now the second version of the study looked at, the first version looked at affordable housing and energy access. And now the second version that we just published looks at financial inclusion and smallholder agriculture. And as we continue to work on this, the next version of the impact performance studies will look at quality jobs and climate change mitigation. So as you can see, both IRIS+ and impact performance studies are working very much together. So with that, I have the great pleasure to pass the mic, if you will, to my colleague Sophia, who's going to be telling us more about the work on the impact performance study in agriculture.
Wonderful. Thank you so much, Leticia, and a big thank you to everyone who has joined this call today. As Leticia mentioned, my name is Sophia Sunderby, and I sit on the research team. And I'm really delighted to be able to chat with all of you about our impact performance study in agriculture and share some of our key findings and learnings, and also hear from all of you about what resonates and what maybe doesn't. So I'm happy to start off with a little bit of insight into our approach for this iteration of the impact performance studies, and really the process that we went through to build out this sector study on agriculture. And for those of you who joined last week, we did follow the same approach in the financial inclusion impact performance study. I'll emphasize from the outset that this has truly been a very collaborative approach as we've engaged, of course, with IRIS+ and also with our advisors and participants through every single stage of this process. And ultimately, it's meant to be most useful for you as practitioners. And so we are truly so grateful for all the folks on the line and also those who aren't that have helped to build this with us. And so we began with a scoping process to understand how impact is created in agriculture and to ensure that we're appropriately contextualizing that impact. We engaged with a number of impact investors, including some of you, but also a variety of sector experts, field builders, including the World Bank, the International Fund for Agricultural Development, One Acre Fund, who are all tremendously experienced and have such deep knowledge on impact in agriculture. Of course, we also worked hand in hand with the IRIS+ team throughout this entire process. And the IRIS+ core metric sets are really what form the foundation of the questionnaire itself. I'll mention that the questionnaire is focused on the sector level, and it includes various impact themes. And this has really allowed us to explore both the intended and the unintended impact and allowed for some of those comparisons across the investment process. And so within the sector view, we've largely based this on the smallholder agriculture theme in IRIS+, and then we've also included additional metrics related to environmentally sustainable agriculture. And I'll note as well that as the IRIS+ theme on sustainable agriculture is being built out over the coming months, as Leticia mentioned earlier, we'll be feeding that right into this research side of things and incorporate some of those learnings and metrics as well. So that's sort of the first step here. Secondly, we began data collection, and we conducted one-on-one calls with nearly every participant who submitted data. And really the purpose of conducting all of these calls was really to fill in gaps. I'll pause here for a minute. If everyone could please mute themselves, that would be beautiful. Thank you. And so really the purpose of conducting these one-on-one calls during the data collection process was, of course, to fill in gaps, but then also to make sure that we're appropriately interpreting each data point and then integrating that context into our impact analytics. Which brings us to the third point here, the analysis phase. We've worked to both deepen and expand our methodology this time around in collaboration with the industry and with many of you. And the analytic approach has 3 distinct components: normalization, outcomes assessment, and segmentation and clustering of findings. I won't dig into these details right now, but I will mention that in our next upcoming webinar in this series on December 2nd, we will be exploring the details of this methodology. And we also recently released the methodology paper, which is now open for public comment. And so certainly encourage you all to take a look at that, and we'll be happy to circulate a link as well. But at this point, I'm really excited to dive into some of the key findings from the agriculture report. And I encourage you to keep in mind some of those discussion questions that Leticia spoke to earlier, and really think about how some of these findings might affect your own work and your own investments in agriculture. So as all of you know, agriculture is truly central to sustaining humanity and accounts for nearly 2/3 of livelihoods globally. We see both the social and the environmental implications play out in this sector, both among smallholder farmers, commercial farmers, and also through the impact of climate change. And so in this research study, we get to see up close the very diverse ways in which impact investors, many of you, are really moving the needle on some of these big challenges within the sector. In this study, we had 38 investor organizations participate and submit data, and they shared impact information on 402 unique investments. In some cases, investors did provide multiple years of impact data, meaning that they shared impact results for the same investment, but for several years. And so overall, we collected 661 annualized investments across the sample. And what you'll notice is that most of the impact analysis that we conducted is at that annualized investment level. The majority of investors that participated were asset managers, as you can see here, and each investor manages about $90 million at the median. Also, unsurprisingly, the majority of investments in the sample were made through either private debt or private equity, but about 13% of investments were made into real assets. And those tended to be the ones that were focused more so on environmentally sustainable agriculture, as you might expect. Prior to this study, what we found was that about 83% of those in this sample use the UN Sustainable Development Goals, or SDGs, to measure and manage their impact. And 65% use IRIS, followed by 61% that use IRIS+. It's important, I think, to emphasize really from the outset that there's such significant diversity and variation across impact investments in agriculture, which is something that most of you on the line know so well. In this sample, we had investments into farmer cooperatives in sub-Saharan Africa, into larger scale farms, into ag tech companies, into seed and fertilizer providers. And in many ways that just makes sense, given the fact that investments really do span the agricultural value chain. As you can see here, a majority of investments targeted production, followed by about 21% that focus on processing. And then a smaller portion in our sample focused on distribution to markets, both locally and globally. It's also important, I think, to note that about 10% of investments target impact across the value chain. They were often focused on activities related to value chain integration. And then very quickly, investees are primarily in the earlier stages of business, either venture or growth. And we also find that a disproportionate number of investments were made into emerging markets in this sample. The sample respondents also primarily focus on smallholder agriculture, followed by strengthened value chains, which really speaks to that point earlier around investors looking to strengthen integration and access to markets. So as I mentioned earlier, we've really worked to deepen this analytic methodology. And a part of that is a focus on outcomes assessment. And there are a couple of reasons that we decided to approach analytics in this way. I think, first of all, we've heard from so many of you that outcomes are really valuable and just really useful in helping to unpack some of that impact associated with investments. It's often what helps gauge progress towards impact objectives and is also, of course, useful in communicating with a variety of stakeholders. But in reality, a lot of the data that's available and that investors are able to collect and share is often at the outputs level, so something like number of clients served. And so we've developed an approach to pull together multiple impact metrics to build an impact pathway in a way that is evidence-backed and rigorous to speak to some of those deeper impact outcomes. This really does build on the IRIS Plus core metric sets, which forms the foundation of these pathways that we've developed. And so for each of them, we assess the outcome indicator to understand how much impact is created. And then we use the other impact management project and IRIS Plus dimensions to contextualize that. And then finally, I'll mention quickly here that we do focus on short-term or immediate outcomes here. So sort of this middle area of the spectrum, and don't necessarily have the data to speak to longer-term outcomes, which is often better suited for more rigorous evaluations and studies and randomized controlled trials. So ultimately, the key takeaway here really is that outputs data have tremendous value because they can really help us speak to some of those deeper outcomes, and that's what you'll see in the findings. So let's dig into the findings themselves. Overall, what we see is that these investments do reflect progress towards impact in agriculture across 4 key outcomes or pathways in the sector. The first one looks at increased environmentally sustainable farming practices. The second looks at improved smallholder farmers' agricultural productivity. The third, increased rural incomes and profitability. And the last, increased rural employment. I'll emphasize that these are 4 important areas within agriculture, but of course they are not the only ones, and realistically we are limited to the data that we have available, and that investors and investees are collecting, which can be a challenge. But before we look at each of these pathways, we have a quick question for you, and we invite you to share using the chat function which of these 4 pathways align to your investments. So feel free to enter one number or multiple numbers based on your own portfolio and your own agriculture investments in the chat, and it'll be interesting to get a sense of where folks sit. Great, I see a few numbers coming in. Great, lots of environmentally focused investors, which is great, and also lots of focus on income and profitability. And so as folks are thinking on that, perhaps we'll dive into our first pathway here on increased environmentally sustainable agriculture. And so this pathway focuses on investments that are implementing sustainable cultivation practices, soil protection practices, or are associated with third-party crop or farming certifications. And as you'll see here, the study is aligned to the Impact Management Project, as I mentioned, and also to the UN SDGs, which is something that you'll certainly see in the report itself. But for each pathway, we explore the who, what, how, and risks associated with the investments. So in this first pathway, we find that nearly 85% of investments target subsistence or smallholder farmers, and about 3/4 target the planet, which is interesting to think about. And really what it tells us is that about 25% of investments are creating positive impact on the environment, but aren't necessarily targeting it, which really speaks to that positive unintended impact that is being generated. A majority of investments focus on increasing the production of sustainable and healthy crops. In terms of how these investments create impact, soil protection or certification practices are implemented across more than half of annualized investments in the sample. And some examples of certification include Fair Trade, Rainforest Alliance, EcoCert, and a number of others. And then finally, the most common impact risk faced by these investments is external risk. And some examples of this included specific agricultural risks, such as weather patterns, drought, consumption habits. Some really interesting insights actually in the report itself through some spotlights. And so certainly encourage folks to check that out in the report. Two things I'll note here very quickly. The first is that how much is not pictured here, since this is captured within each of the dimensions. And then secondly, contribution is also not here. And for this dimension, we looked at metrics and indicators related to the timing, terms, and engagement of an investment. And so you'll see a few of those insights scattered throughout the report itself. So the key finding here is that for an average investment, over 4,300 hectares of land are associated with environmentally sustainable farming practices over a 1-year period. As part of our analysis, we also assessed the scale of impact relative to the size of the social or environmental challenges faced in investees' countries of operations. And here what we find is that a single investment implemented sustainable practices on an average of 0.04% of total agricultural land across the countries in which investees operate. This may seem rather small, but of course we would expect that since no one investment will be able to, of course, solve all of these major challenges. But really what this tells us is that there is material progress being made, and that is certainly something worth celebrating. I'll now move on to our second impact pathway, which explores improved agricultural yields for smallholder farmers. And here we look at access to agricultural inputs, finance, transport of products, along with training provided for stakeholders and those who benefited from certifications. As we'd expect, we see that almost 80% of the investments target subsistence or smallholder farmers. And we also see that most of these investments were made into emerging markets, primarily sub-Saharan Africa. The most common IRIS Plus strategic goal within this pathway is increasing access to agricultural training and information. And the data tells us that agricultural training is provided for an average of over 47,000 individuals for a single investee. And trainings included proper application of fertilizer, use of inputs, storage of harvest, conservation practices, so a whole variety of things, often related to production itself. And then we also looked at the average yield associated with each investment. And interestingly, perhaps unsurprisingly, those associated with sustainable practices have a higher yield of over 4,600 as compared to those without. But I will mention that, of course, yield varies significantly, driven by crop type, maturity, seasonality, weather, all sorts of things, which does result in significant year-to-year volatility. And that really relates to the risks that we see. And so external risk remains the most significant, as you can see here, and in particular, climate risk associated with farmer uptake of seed and fertilizer. The key finding here is that an average of over 11,500 smallholder farmers experienced an increase in yields over a 1-year period. And in total, over half of farmers in this subsample actually experienced an increase in yield. And then we find that on average, a single investment increased yields or provided training for 0.16% of those living below the national poverty line in the countries in which investees operate. Again, a small percentage, but really does demonstrate the progress that a single investment can make. Third, we looked at increased, we looked at increased rural income and profitability. We see that once again, there is that focus on subsistence or smallholder farmers based primarily in emerging markets. The two most commonly targeted IRIS Plus strategic goals were increased farm profitability, which naturally makes sense, and then also increased access to agricultural training and information. And what we see is that impact is most commonly generated through agricultural inputs, with the greatest proportion of individuals experiencing increased income through investments in the production stage of the value chain. And so we certainly see overall quite an emphasis or focus on production. And then once again, we see a big focus on external risk as sort of the most common type of impact risk faced by these investments. Overall, our key finding here is that investees generated increased income for 6,539 individuals over a one-year period, and about 62% of total clients served experienced an increase in income across that subsample where data was available. And then taking a look at the impact relative to the scale of the problem, what we see is an average investment enabled an increase in income for 0.03% of all those living in rural areas in the countries in which investees operate. And our final pathway here, as you can see, looks at increased rural employment. Here we look at organizations supported along with jobs directly or indirectly supported by the investor. And so almost universally, investments that are supporting employment reach clients and other stakeholders in rural areas. We see that with about 98% of the investments. The top IRIS Plus strategic goal targeted includes increasing farm profitability, and then also access to better and more stable pricing of agricultural products. In terms of how impact is created in this impact pathway, investee companies tend to manage stakeholder engagement. Investors don't as much. And we do see that the highest average number of jobs at directly or indirectly financed enterprises per year is among those investees operating in the production stage of the value chain, about 351 jobs. And then, of course, as we've seen in each of the other pathways, there is significant external risk faced here. Overall, what we see is that on average, a single investment facilitated 257 jobs directly or indirectly, supporting 93 client organizations and over 79,000 rural clients. And I'll mention briefly that this also speaks to sustaining rural livelihoods more broadly as we think through the agriculture sector as a whole and really how this might contribute to rural economic productivity. And then, of course, an average investment was associated with jobs accounting for 0.035% of the unemployed population in each of those countries where investees operate. So I realize that's a lot of information, but to bring us up to a higher level and think through what's most meaningful here, really what we're seeing is that impact investments in agriculture do reflect progress towards these various outcomes. And in part, that is reflective of the significant diversity in the sample. But despite that diversity, all investments do reflect a commitment to and also achievement of various environmental and social impact across a number of metrics. And we see that especially plays out for underserved populations. And then lastly, there are, as always, very big opportunities for further impact investment and also for deeper impact. And we see that especially when thinking through strengthening access to markets and also through agricultural risk mitigation. But the reality, of course, is that this is based on a small sample of investors who submitted their impact results. And our goal is to further deepen these insights and provide information that's really useful for you. And so we are continuing to accept submissions on a rolling basis and absolutely encourage folks on the line to submit their impact data and really contribute to this growing base of impact results. So at this point, I'll pause here and put up these discussion questions. We're curious to hear from all of you on what resonates and also what doesn't. And if you want to share any examples from your own portfolios or investments, we very much welcome those too.
Thank you, Sophia. Also acknowledging we have quite a number of questions on the chat box, and we will get to all of these during the Q&A. I think Sophia first wanted to ask these questions around what she just presented, but then we'll come to all the questions in the chat box.
And if there aren't questions, I'm happy to start tackling these ones here. I think that's great.
Hi, this is Molly from AgDevCo. I'm the impact manager at AgDevCo, which is a impact investor that focuses primarily on agricultural companies in Africa. I just wanted to say that what was really useful for us was having some form of a benchmark to help us to navigate whether or not we were doing any good, really. I mean, I think we can compare our own data from one year to the next, but what really helped, was really helpful for me, was to be able to kind of say to our senior management that, you know, on average, investments are facilitating, 250 jobs a year, and that compares to our average of 350, really well, and it means that we're doing well against the industry, and that's really great. And it also allowed me to be able to share sort of comparative insights with the investment teams around some of the areas that we weren't doing so well. So in terms of number of customers per investment, being able to say, listen, we always thought we were doing really well at this, and we are, but here is how it's being done differently. So that was really useful and is actually being used in some of our screening processes. We always use our averages to to say, okay, yes, this investment looks like it's going to reach a similar amount to other companies. We now can actually use the averages from this report as well. So in that way, it's been really useful for us.
That's great to hear. Thank you so much, Molly, for sharing those insights. And we're really pleased to hear that it feels like it has been useful. And what we will get to perhaps after this discussion portion is the analytics component of this. And so hopefully folks will sort of be able to see some of that as well and bring to light some of the pieces that you're talking about. Any other folks have any thoughts on any of these questions?
Hi, Sophia. Can you hear me?
Hello. Hi. I can hear you.
Hi. This is Sherman from GIIN Capital. We're a impact investing private equity firm based in Shanghai, China. And we also participated in this survey. We submitted 4 unique investments from our portfolio. And I just want to try to answer the 3rd and 4th question. Just one example from our portfolio, it's called GIIN. It's basically a duck farm with vertically integrated production, and we basically target three goals based on today's discussion. At the same time, one's environmental sustainable practice, where we recycled 100% of our waste into organic fertilizer and use it in the local area and the local production. And the second main target is to create more rural employment. 50% of our 21,000 employees are returning farmers. So we're talking about people who went to like larger cities to pursue job, and then we brought them back into their hometown basically and work in the duck farm. And the third one is increase profitability and income for smallholder farmers. So just a little background, the areas that we worked in is one of the counties that identified as the extreme poverty county in China. Based on the 2012 China Sustainable Development Strategy report, there are over 1.8 million poor people living in rural areas. So we went to one of those towns, and we by the end of by the time that we exited from the project, we alleviated poverty for 3,000 people based on the national poverty line, which is 2,300 yuan per year, which is something like 3,000 USD. So that's one example for our own portfolio that align with those findings. Yeah, and when I look at the final report a few weeks ago, I think it's really exciting to see how where our data sits compare with other people's in terms of increased income. I think the average, I thought it was somewhere around 14,100 for increased agricultural inputs. And compared to ours, it's somewhere around 30,000, so it's right up there. But I was curious in terms of how, I think Jacqueline also asked this question earlier, how others actually assess their whether or not their smallholder farmers are experiencing increased income, and how do they verify that data? Because for us, we are relying on interviews and focus group, so it's basically self-report data, whether or not they're experiencing increased income. So I was wondering how others are reporting their data and verifying the data. Yeah.
Thank you so much, Sherman, for sharing those really helpful reflections, especially relating back to your own work. And I think the theme, especially of profitability and poverty alleviation, is certainly prevalent sort of across the board, and what we see in a lot of the data. In terms of your question, I think it's a really good one, and I can speak from our perspective on the research, where we are using self-reported data, and so all of it is, as you know, reported to us and is anonymized and reported out in aggregate, but there isn't any verification on our end. But it's interesting because one of the pieces of information that we were able to gather based on our State of Impact Measurement and Management Practice Report, which was released almost a year ago now, we were able to see which impact investors within a subset of our group are sort of undergoing some kind of third-party external verification or audit. And we did see that it was probably less than half that was undergoing some sort of third-party verification. But it is a really good point, and I think a bigger question for sure for the industry. And then perhaps to your other piece on measuring client income, it's definitely a tough one, and we are aligned with the IRIS Plus core metric sets, and so client income is one of the outcome indicators for a couple of those strategic goals that you see. And so we collected data based on that, and through follow-up discussions with almost all of the investors, we got to learn a little bit about how they're measuring that and their approach. And a lot of it is actually through data collection tools and interviews, which is also something that we see in our data set when it comes to stakeholder engagement, where quite a few investees are engaging with those end stakeholders through data collection mechanisms like surveys. So I hope that's helpful in sharing some insight. I see that we've only got 15 minutes left, and so what I'm keen to do is perhaps jump to our analytic demo and then tackle some of the questions that I know are coming through the chat. But essentially what we're hoping to share with you here is just a sample dashboard, and you'll see the whole set of dashboards on our website as well as on the IRIS Plus website. But essentially, these are meant to really bring the data to life. This one in particular is focused on key performance indicators in agriculture, and so they're aligned with the impact pathways that we saw earlier. And what you'll see is that the dashboard essentially offers insight into typical performance, as well as the distribution of impact across annualized investments. And I see that there was a question there in comparing the 402 unique investments to the 661 annualized investments. And so essentially an annualized investment represents 1 year's worth of impact data. And so for a single investment, you could actually submit multiple years of impact data, let's say from 2016 to 2019, and those would be represented as 3 different annualized investments. And so that's what you'll see here, and that's sort of what each circle represents. Before showing you the data, I'll point your attention to these 3 filters over here. And this allows you essentially to select or filter results based on certain categories or types of information. And then finally, we see the data here. At the bottom, you'll see an average for each of these key performance indicators. And you'll also see the number of annualized investments included for that particular indicator. And so that's a snapshot. But what I'll hopefully do now is just give you a little sneak peek into the back end on our side, so you can see what this looks like in practice. And so what you can see here is sort of the back end of the Tableau, and this is essentially what you'll also see on our website. And so you've got the instructions up top, the filters over here, and then each of the key performance indicators. And if you're interested, for example, in only investments that are perhaps targeting risk-adjusted market rate returns, you'll be able to filter the data and click on that and see what the data looks like for that particular segment. And what I see here is that I've also filtered by input supply. So I'm going to undo that, and you can see what the data looks like for that particular segment. I would love to show you all sorts of other really neat elements of the dashboards. I don't think we have time, so I will refrain from doing that. But what I do encourage folks to do is take a look at the dashboards on our website and play around with the data. There really is some really interesting insights that you can glean for your own portfolios. And feel free to reach out and let us know what works for you, what doesn't. I know that we've got about 10 minutes left, and so I'm happy to either tackle a couple of questions in the chat, or Leticia, pass back to you to chat through next steps. Do you have a preference?
Yeah, let's go through the Q&A and then what we have in the chat, and then I can go through the rest in a minute just as we close. One thing that you just noted, Sophia, how you got from, to 661 annual investment from 401 unique investments. Matilda was asking about clarity on that, and her question now is whether it is because of the 401 unique investments, if they last more than a year, in that case they turn into several annualized investments, or how do you actually go from one to the other?
That's exactly it. So if there is an investment that is either over multiple years, or it's an investment that goes into that same investee or company, then we do track it on the annual basis, but they would become several annualized investments if investors choose to report on their impact results for multiple years of data. So essentially, each of the investments would still represent a one-year basis, but it could be that an investment over a period of 3 years, we would have the 3 sets of impact results for that same investment. It's a great question, and definitely merits clarification.
Awesome, thank you.
Great. I'm just scrolling through the chat here, and I see that there is a question about information on the role of technical assistance in achieving impact, and recurring TA needs or opportunities identified. It's a really good question, and one of the pieces of information that we analyzed in this work was exactly around sort of capacity building or non-financial support provided. And what we found that among all of the investments in the agriculture sample, just under half were actually providing any kind of sort of capacity building or TA or non-financial support, whereas the remaining were not. And this was funded either through management fees or, in some cases, certainly in fewer cases, governments or donors. But then what we also saw, of course, and you saw that in the data, was just the amount of training that is offered. And so almost half of all stakeholders included in the sample are actually offering training for their end stakeholders. And then I think I see another question here from Sally on what impact thesis did the investors have, perhaps using the IMP framework around doing no harm to actively contributing to solutions. It's a really good question. And so we did not ask the question in that way, but what we did preface in our questionnaire itself was that any investor who is submitting impact results must meet the definition of being an impact investor. And so, of course, generating some kind of positive social and or environmental impact, but then also actively measuring and managing it. And so we would expect that it's not the folks doing no harm that are included in the sample, but it really is those folks that are actively
I think also in terms of coverage, we have two questions that ask about specific sectors. One, whether the study looked into alternative plant-based companies, as well as whether poultry and livestock was included.
However, when we looked specifically at, and so it wouldn't be standardized. So that's a great question. So Leticia, I'm happy to pass over to you if you wanted to chat through next steps, unless there are any other questions.
Great, happy to go into next steps. And then if there are any other last minute questions or reflections, please put them in the chat box. So in terms of what's next, we wanted to share a little bit of what's ahead. So as we said, this webinar series is a 4-part. This is our 3rd session today. We have the final session on December 2nd, which actually will be looking at the methodology that the GIIN built for analyzing impact performance. This is also up for public comment period, so we encourage you to join this session to learn more and also to help provide your feedback. We are also open for public comment on quality jobs and core metric sets and metrics for quality jobs and WASH, and that opened in November and will go into December. And we're also, as we always say, the development of Iris Plus themes takes place on an ongoing basis. We have kicked off sustainable agriculture. So if any of you on the line would like to join us and help inform, share your feedback, or learn about the work we're doing on sustainable agriculture, please reach out to us. We'd love to have you involved if you're not already. And we're going to be kicking off early next year clean energy, racial equity, and biodiversity. So stay tuned for those. As soon as we're ready to kick off, you'll hear from us. And as Sophia said, the data collection for the impact performance studies takes place on an ongoing basis. So if you haven't participated yet and you're excited about the results you heard today and you would like to submit your data so that you can see how your own results compare to those of the group of aggregated bases at the sector level, please do so. On the Iris Plus website, actually on the menu, if you go under data, we have uploaded the Excel templates that you can use to share your data. And as Sophia said, the GIIN team works very closely with each investor submitting data to answer any questions. So any questions you have, know that I know on the other side we'll be here to help you, walk you through the process and answer any questions. And Matilde, I see whether we collect data continuously on this topic. Yes, we do. Is the objective to publish a report? So Sophia, I'll let you answer. I know that the tableaus or those dashboards that Sophia was sharing, those get updated on an ongoing basis, and those are available both from the Iris Plus website as well as on the GIIN website. But in terms of publishing itself another report, is that something that we're considering, Sophia?
So it's not currently in our plans, but it is something that we're constantly thinking about. And so for now, Leticia, as you mentioned, we'll be sort of collecting data on a rolling basis and definitely updating those analytic dashboards. And the goal is to really have that almost as a real-time or live version of what is happening in impact investments in agriculture. But we'll certainly keep you posted if there are any decisions for a new publication or anything on that front.
Super, thank you. And thank you to my colleague Kellen, who also put on the chat box the specific links to the IRIS site where you can either download the reports, the different impact performance study reports that exist today, as well as see the sample dashboards, and also download the Excel templates you can use to share your data. So you can see here on this slide as well. You can see these both on the IRIS Plus website and on the GIIN website. So with that, thank you, Sophia, so much for walking us through this really exciting work. We're excited to share with all of you. If you have any other questions or thoughts, please don't hesitate to reach out to us. And definitely tune in into the next session on December 2nd. We'd love to hear your reactions and reflections into the methodology that went into developing this work. So thank you very much. Thank you, Jessica, for sharing the experience. One more question from Matilde. Sophia, is there any synergy or complementarity between our dashboard, between our data and the dashboard on the Council on Smallholder Agriculture Finance?
Yeah, great question, Matilde. So we actually did chat with folks from the Council on Smallholder Agricultural Finance when developing the questionnaire for this project. And so we looked at the metrics that are available on that dashboard when thinking through what impact metrics we would ultimately include. And so you will see some alignment there, but we are not currently working together in terms of the actual data assets.
Excellent. Well, thank you, everybody, very much. Have a great day.
Thank you.